Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, finally we're seeing a little bit of bearishness from the Australian dollar as the market plummets towards 70-cent handle, pressured by renewed safe haven demand for the US dollar amid intensifying Middle East tension. With the US dollar index climbing towards 99.10, markets are still preparing expectations for an aggressive easing from the Federal Reserve, keeping US yields firm while the RBA maintains a restrictive stance, with Governor Michelle Bullock warning a rate hike remains possible if inflation expectations become unanchored, as attention also turns to Friday's major US non-farm payrolls as well. So there's still a lot more to go on in case the market is likely to expect a pause, but unlikely. With the recent whipsaw price action, eyes now look towards 69.70. Also keep an eye on some of the crosses, as no doubt we may see a bit more movement when it comes to sterling Aussie and also maybe in some other crosses. Given the heaviness of the technicals, the bears are weighing on the Aussie, limiting the upside around 60.75 as a cap. The euro dollar takes a hard hit overnight and now back below the 116 handle, as pressure still on the multi-month lows as escalated Middle East tension. The geopolitical backdrop adds downside risk for the euro, given European reliance on imported energy, while attention now turns to the Eurozone services, the PMI, and also US data, not forgetting that being the ADP employment and the ISM services. And along with that, we have the US non-farm payrolls on Friday, which will be the key drivers. Given how far this market has dropped, there is still a bit more room and could actually see around the lows of 114.80 before a bounce. Reassess from there. Dollar yen may be marching higher, but I'm still expecting a bull trap that could see all these gains wiped, but initially waiting for that trigger. The markets have produced many small candles, so there's not huge demand in this rally, even though the ADX is holding well and also the MACD. Still, we can get this rejection, and I'm keeping a very close watch on it. Sterling also takes a tumble and weighs on the support area of the lows of 133. Given how the technicals are set up, we could see a bit more of a downward move towards 132.5 in case that ADX does strengthen up a little bit more and reassess from there. Turning to commodities, well, the yellow precious metal erases some of the previous session's losses, nearly around about 1% after falling around 5%. As some profit taking comes back into play given the rejection above 5,400. I still feel there is much upside to come, anywhere towards 5,500, and still keep in mind where this broad trend is, somewhere around 4,750 to 4,800. More gains when it comes to oil and still not filling this gap, and now still reassessing, because given the fact that the market has escalated higher, it's all on fear, and no doubt we may see a very sharp reversal. We have seen it before when we look back here, a very, very heavy candle, and no doubt we could still see that happening again if history repeats itself back to $67 a barrel. Nevertheless, the technicals are overbought, so let's see if we get that pullback. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report, and I hope you enjoyed the great start to the day.